Hello, everybody. Happy New Year. Welcome to the 2021 edition of ETF Edge. I'm your host, Bob Pisani, and as always, three of the best in the business here with us today. Dave Notting is the Director of Research at ETF Trends. Jan Van Eck is the CEO of Van Eck Associates. And Harry Witten is the head of ETF Sales Trading at Old Mission. Dave, let me start with you. We have seen record inflows into ETFs at the end of 2020, more than $5 trillion now, assets under management. I know you have talked before about inflows into ESG, and thematic ETFs as a major factor in the inflows in 2020. Do you think ESG and thematic ETFs will continue to account for a good part of the inflows in 2021?
Yeah, absolutely. I do. I mean, this was a record year in so many ways. We had over $500 billion in new money flowing into the ETF industry, over 300 new funds created for investors to trade in. Most of those new funds fall into the category of either something that's not beta, whether that's thematic or actively managed, or something around ESG. Those have been two core themes. I don't think those are going to go away anytime soon. I do think we're heading into a world where folks are a little more concerned about risk management, but thematic ETFs for sure are here to stay. We've all seen this K-shaped recovery and how it's really nominated winners and losers in the market, and investors and advisors are really out there trying to find those winners.
Yeah. Harry, I want to go back to ESG and talk a little bit about that and thematic ETFs, but I know you've spoken in the past that active non-transparent is going to be a major factor for ETFs in 2021. And you also mentioned significant conversion of mutual funds into ETFs. We saw dimensional funds starting that trend. Can you explain a little bit more about these two trends to the viewers and why they're going to be important in 2021?
Hi, Bob. Thanks for having me on. Sure. So on the non-transparent front, if you look back to January of last year, there was not a single non-transparent fund available. Come the end of December, we had roughly 20 funds that are out there. And I think starting in 2021, you're going to see a lot more of these new products coming out. You're going to see a lot more of the traditional mutual fund companies coming out with these products. I know Fidelity specifically has already said they're going to clone the Magellan Fund and have that as a non-transparent ETF. So that's going to be pretty exciting. I think that's also going to make a lot of people more aware of these products. Now, on the conversion front, a lot of these traditional mutual fund players are looking what to do with the existing assets, what to do with their existing book, and they're looking into changing them into ETFs. There's already 3 firms, like you said, one of them being Dimensional, that have come out and said we are going to be doing this. The Dimensional specifically is going to change 6 funds and over $20 billion in assets into the ETF structure. So this has a huge potential in the marketplace to see a lot of assets being moved quickly. And if you look at what Vanguard did in 2020, they were telling people actively you should move your mutual fund share class to the ETF share class. They have a little bit different structure than a traditional ETF, and that's what they're doing.
Harry, let me just follow up with that, Harry. Do you think that the move from mutual funds into ETFs could really turn into something really significant? I mean, could it account for a sort of second wave of ETF inflows that are really statistically significant? In other words, could we see $8 trillion or $10 trillion in ETF assets under management in the next several years, essentially a doubling? I'm just asking, how significant is that?
It's a very good question. I don't really know the answer, but it could be significant. A lot of the mutual fund assets are going to be in retirement plans, so you don't see those moving. But non-retirement plan assets or stuff like that, you could definitely see a very big chunk. I mean, $20 billion from Dimensional alone in 6 funds. That's a lot of money.
Yeah. Jan, I don't know if you want to jump in on this. Maybe we can get back to it, but I've got to ask you about Bitcoin. I know I constantly pester you about this, but you're kind of the man in this particular space. You have filed for yet another Bitcoin ETF after being turned down several times. We've got a new year. We've got Bitcoin at a historic high, so the timing is perfect. Kudos to you. I know you can't talk about the specifics of the filing, but we're going to get a new SEC chairman some way down the road. We have an acting chairman now, but are the prospects for a Bitcoin ETF any better in 2021 than they were in 2017, 18, or 19?
Well, we weren't trying to time our filing. We are just believers that this is something that investors should own, and so we'll keep at it. There are a couple of rays of hope. Not that I'm predicting approval or anything like that, because nothing has really changed. But one of the rays of hope is that the SEC last month gave some guidance on how broker-dealers can custody Bitcoin in a specialized manner. But nonetheless, I look at that as a glass half full announcement from the SEC, its very own regulatory agency. Secondly, you've seen regulators in Canada last year and in Europe last year approve retail Bitcoin products. I think that's really important because I do think the regulators have similar concerns about investor safety. And so I think if others have become comfortable, then why can't they? And then, look, like it or not, Bitcoin's going to keep being in the headlines, I think, in 2021. Probably the biggest news earlier in the year will be when Coinbase goes public. They're the 35 million client crypto exchange that's operating here in the U.S. And so you can't really avoid it. And there's so much exciting things happening outside the regulated space. The thing I like to point out is that you can earn interest on your Bitcoin holdings. Most people don't know that. That's sort of evolved over the last year or so. And so that what's happening in the crypto space is moving really fast.
Yeah. As I recall, I just want to stick on this for 1 minute, Jan, and guys, feel free to jump in. The concerns the SEC had in the past were basically twofold. One is a lot of the trading in Bitcoin takes place in overseas exchanges that they were suspicious about. They couldn't control. They had no regulatory control over that. That was one big concern. The second was the general fraud concern around custodial issues. Those seems to be the two big things, if I'm correct. Jan, is there some reason to believe that those issues are now more better defined or of less concern to the SEC? I'm trying to figure out, how do you get them to say yes? Wasn't those two issues very prevalent, and have they been addressed?
Exactly. And I do think that's why the guidance on broker-dealer custody last month is a ray of sunshine. Custody is absolutely a concern. You have firms now, brand name firms like Fidelity, offering custody of digital assets, of Bitcoin and Ethereum and other digital assets. So there's been a lot of movement on the custody front. So that's number one. On the market manipulation front, what people are doing and what we're doing is constructing indices that get price inputs from exchanges that have some kind of regulatory nexus. So there are 5 or so exchanges, crypto exchanges here in the U.S. that somehow have reporting through to the SEC. There are different exchanges in Europe. We have a retail product in Europe that was approved, and they're looking at different price feeds. But I think if you can get the regulators comfortable with the underlying price feeds, it's better.
Dave, it's time for you to weigh in here. It's a Groundhog Day on Bitcoin ETFs again. For all 4 of us, weren't we here 3 years ago?
I think we're going to be here. I think we're going to be here in another year or two. Look, I'm a fan. I think that Bitcoin and crypto should be inside an ETF wrapper. It's a very logical way to actually deal with many of the issues that folks have around Bitcoin in terms of access, and liquidity. And ETF solves those problems. It's not a victim of them. It's actually a solution to a lot of these problems. I think what we're seeing is just the crypto market is maturing, right? That's the key thing. And I think mostly what the SEC wanted to do 3 or 4 years ago was frankly let the industry mature a little bit, let it solve some of these problems that it raised. And as Jan points out, a lot of those hurdles are getting knocked over in a good way. I think it's a little early to think that somehow, say in September, we're going to get an approval. Although, never say never. Depends who we get in the SEC as the commissioner, obviously. I think 22 is probably a pretty likely time. I think it really doesn't strike me we're going to go much past that. I think the next 10, 12 months might be a little bit dicey.
Yeah. Dave, let me just go back to ESG quickly. And Harry, feel free to weigh in here. It's clear there's a lot of interest in climate change in the Biden administration. And I'm wondering how that'll impact the ETF business. Some in the SEC already have made it clear they want to make inquiries with companies about what their climate change policies are. This is what I call a real nudge. It's not saying you're violating anything, but we're saying, hey, what are you guys doing, even if there aren't any? So I'm wondering how all this sort of plays into the ETF space.
Well, there's no question that the Biden administration will be much more favorable towards ESG investing and ESG concerns than the current Trump administration. I think that's relatively non-controversial to say that. The question is whether or not investor demand continues to be there. Everything that we're seeing suggests that investor demand will continue to be there, whether it's from the millennial wealth transfer, whether it's just high net worth individuals looking to do something a little different with their money. ESG is rapidly being recognized not just as a values expression, but as a risk management tool. And I think risk management is where ESG is going to find its really strong legs over the next 2 to 3 years.
Harry, you want to weigh in here? You feel the same way?
Yeah, I agree with what Dave said. And I think what's really important about the ESG space when it comes to ETFs is a lot of firms have made allocations in their models to the ESG funds. So as people are putting money in the models, they're automatically investing into these ESG ETFs. So some people probably don't even realize they have them already. So it's a big part of these models now, and it's just going to be a constant cash flow in. So you're just going to see more and more assets go into the space.
Yeah. Jan, I wonder if you could weigh in on sort of ETF trends in 2021. I just want to stay on the ESG space. I'm wondering about things like diversity. I mean, we saw NASDAQ, we saw Dina Friedman come out very aggressively a few weeks ago and say, hey, we want more boardroom diversity, essentially. I'm not sure she made it a condition of listing on the NYSE or they'd kick you out if you didn't, but they made it pretty clear that's what they're looking for. So now we see climate change and it seems like boardroom diversity. These are two really big issues. Is this a real ongoing trend? ESG certainly appeared in 2020 as a major trend. Yeah,
look, I think that I focus on the E or environment in ESG because I think there's much more of a consensus around that. And we call it the energy transition, which isn't just 21 and 22. This is about a 10 or 20-year trend of movement away from fossil fuels. And so we see that in every major jurisdiction, in Europe, in the U.S., and in China now, which doesn't get a lot of credit or a lot of attention. But I think that's a big trend as well. And they keep pulling their deadlines closer. So there's no doubt that there's going to be an environmental transition I think over the next decade or two. I think it's hard to put into a formula, and so I think active management can add a lot of value here, but that's kind of how I see it. It's absolutely a major trend. We talk about it a lot with clients.
Yeah. Dave, I heard you mention two other trends, ETF themes for 2021. Number one, the hunt for income, and number two, infrastructure. Once again, another, we've been here before story. Tell me about the hunt for yield and how we're going to find it. And number two, how can we turn this into the year for infrastructure? What scenario happens where that actually becomes a real story and we don't just bring it up again and nothing happens?
Well, the hunt for yield has been active now for a couple of years. I think what was really transitional in 2020 is we saw a lot of what I would call alternative income vehicles really come into their own. I'll highlight a couple. One of Jan's own funds, ANGL, which looks to get recently downgraded investment grade bonds into a sort of one individual bucket. Historically, that's been a strategy that's worked. If you look back over the last year or two, that strategy is throwing off 3 to 4% on an SEC yield basis and beating both the liquid and the junk market by about 2% last year. So that type of alternative income approach has really worked. We've also seen products that use options to extract income from the equity markets. Those have been very successful. We got a lot of those types of products filed already to launch next year. I think you'll see a lot of discussion around things like preferreds and REITs. A lot of people bottom fishing real estate right now. I think all of those are going to continue to be trends. I think when we're thinking forward to next year, you have to ask yourself, what can the Biden administration get done, assuming we end up with deadlock, which I think is the sort of the median case outcome. And in a deadlock environment, infrastructure is one of the only things they can probably get strong bipartisan support for, helps boost that big G government spending, which is sort of one of the places we haven't had the kind of response we would expect from government. It's really been in aid, not in government direct spending outside of the narrow cases of the vaccine. I think this is a real opportunity. There are a bunch of great funds in the space, and I think we'll see a lot of traction probably coming into the second quarter.
Jan, you and your entire organization made their bones in the commodity space, particularly gold, way back when. Want to give us 30 seconds on the gold outlook for 2021?
Listen, I think investors want alternatives. They're very concerned about the huge government stimulus of early 2020 that got us out of the kind of coronavirus financial freefall that we were going through. But that's, as Dave was talking about, the income part of people's portfolio is really suffering in this low interest rate environment, and they're looking at gold as an alternative. Gold does well in the low interest rate environment. So all-time highs last year, and I think that continues. But I'd also own some Bitcoin as well if you can. That's our diversification hypothesis.
Love it.
You're nothing if not diversified, Jan. You and your firm have managed to diversify out of gold for many years. I respect you for your ability to morph into new areas. Finally, maybe Harry, you can weigh in on this, or any of you guys. I can't help but notice that the big are just continuing to get bigger. My friends over at ETF.com, of course, we look at the year-end flows, and one of the things I look at is the size of everything. And I noticed the top 5 ETFs are 27% of the business, of the equity business. So 25 ETFs, all S&P or Vanguard Total Stock Market, here they are, account for 27% of the $4.1 trillion of the U.S. equity ETF market. That is rather remarkable, considering, guys, there's 2,000 ETFs out there, and you got 5 of them that are essentially 27% of the equity ETF market. Harry, I mean, it's just a startling fact. Is this going to continue? Are the big going to continue to get bigger, or is there any other room for anybody else, like Jan Van Eck's fund getting bigger, or Kathy Wood getting bigger?
Yeah, exactly. The big, they still keep getting bigger. I think VTI was the #1 fund for inflows in 2020, if I'm not mistaken. A lot of these are core holdings, as I talked about before, in models. So the money that goes into models are just going into these funds. But I think 2020 did show us that you can go outside the box and look at other funds. ARK is the perfect story, as you just mentioned. People, they're the #4 fund group year to date, or 2020 in total inflows, and they were nowhere in 2019. So I think more and more people are looking at more products outside the top 5, but they're still the tops. And it'll be a while before they get knocked off.
You run a pretty. Sorry, Harry. Yeah, Jan, you run a pretty respectable ETF fund family. It's up there. What are your chances for 2021 getting more assets under management? Or is it all everybody going to just put money into Vanguard Total Stock Market or S&P 500 funds?
Well, listen, we've been able to grow 20% over the last 2 years, I think, each year. But every year is a struggle. Last year, our biggest inflow fund was our Fallen Angel high yield ETF. So you have to have diversity of offerings, I think, to be able to engage with clients no matter what's happening in the market. So it's definitely a getting bigger industry. But if you do have quality solutions, smart beta or whatever you want to call it, I think you can still make some room for yourself in the industry.
Yeah, that makes a lot of sense to me. Okay, guys, I got to leave it there. That does it for this edition of ETF Edge. And my thanks, as always, to my friends, all 3 of them, to Harry and to Jan and to Dave. And just a reminder, you can see all of our programs. All of the videos are on etfedge.cnbc.com. Now, stick around, because I'm going to ask Dave Noddick to stay a little bit longer, because he has the answer to everything. And we're going to get all of those answers out of him on the podcast part of ETF Edge. So stick around, everybody. And everyone else, welcome to 2021. It's going to be a better year, I promise. Thanks for joining us.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.